I think that I can differentiate Karner Blue by walking through in very much detail how we incorporate and integrate ESG into our business calculation and how we look to provide outperformance and market returns for our clients. Most ESG integrators will use restrictive screening. Founded back in the religious organizations of the 1700s under the Methodists, restrictive screening eliminates those companies in those industries that are considered to produce social or detrimental harm to society. That would include liquor, tobacco, firearms. In the case of Karner Blue Capital, we've eliminated any fur exposure because we believe there's alternatives to fur. We don't need to kill animals for fur, and coal. So those are taken off. Those industries are eliminated immediately. Restrictive screening has been used for centuries. We then say, okay, our issue, our focus, we want to use the capital markets to move forward the planet more sustainable and save biodiversity. So we only focus on those industries we consider high impact with biodiversity. We have 14 industries, a few, of course, agriculture, textiles, apparel, transportation, paper and forest, pharmaceuticals. We look at 14 industries and carve those. Those are the companies we're going to focus on. This is all part of our ESG process. We've taken now this Morningstar Developed Market Index is our universe. We've taken that down from 7,000 to about 2,000. And now we say, okay, we want to integrate, really integrate ESG. So we layer on our ESG data provided from Occam, who I think is, all of them are good. I love Occam. And we integrate Occam's ratings into that universe of high impact industries, exclusive of those restricted industries. And we say only those companies that perform at the mean level for their industries, because there's some industries that are better than others, of environmental, social, and overall governance scores are included for further consideration. We then move down the spectrum, which I believe is the next part. We've incorporated ESG, but now we're integrating ESG. So those remaining companies, those 50% that performed above the mean on overall corporate sustainability and responsibility, are now evaluated in the Karner Blue proprietary industry models with key performance indicators, industry specific, by industry analysts that know the issues and know the risks and know the opportunities. Those companies then, only those companies that score above the mean in our key performance indicator models. And this is extensive work that we've done on these. I just walked you through some of the issues that we've looked at, only ag, and we have 13 other industries. Only those then are kicked over, and this is what makes us different, to our fundamental financial team, where there's a technical analyst, a fundamental financial analyst, and others that review those outperformers, looking for those that are going to give our investors the best opportunity for financial returns. We use the mantra quality at a reasonable price and have very little exposure to growth, much more a value tint. And I think what makes us unique is we have very little exposure to the FANG stocks, and yet our returns are marketable. And you can check out all of that on our website. But that is what makes us different. And also, during the fundamental financial review process, these are Karner Blue employees. We are not outsourcing our investment management. These are people that are founded in the belief that we can do better for our investors and for everyone else by investing in those companies that are going to lead us to a more sustainable future. So they integrate top trends in biodiversity, opportunities, plant-based foods, electrical vehicles, looking forward to the future.